Before we get into today's episode, don't forget to sign up to the book and the VIP newsletter at thehighestandbestuse.com. For the book, you can get that at Amazon, Chapters, Barnes & Noble, all of these places in paperback, ebook, hardcover, and of course now the Audible version as well. So grab the book, sign up to the VIP newsletter, thehighestandbestuse.com, and now to today's episode.
I'm Scott Jeffrey, and the highest and best use for my business is building custom homes in a subdivision setting.
Thanks for tuning in to the Highest and Best Use Real Estate Podcast, where we talk techniques to optimize your land, structure, skill sets, and time, as well as the highest and best use principles to make your business more profitable, productive, and efficient. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. And on the show today, my guest is Scott Jeffrey. Scott is the owner of Jeffery Homes. They do infill and subdivision builds, and they've been in business for 50 years. Scott, thanks for being on the show.
You're welcome.
This is fun. I'm excited.
Yeah, thanks for having me.
Your first show.
It is.
This is great. So today I want to talk a little bit about the psychology of being a builder developer and what that actually looks like in today's landscape. So before we kick it off, tell the folks a little bit about yourself and Jeffery Homes.
Yeah, it's a Scott Jeffrey, a family business. My dad started it 50 years ago. I mean, he built his first house in 1964, and that was the year I was born. So, little while ago, he has since passed away, and so I've taken over the business. But basically, I've grown up in the business. You know, I was the only son. I had two sisters, so I was with Dad all the time.
Yeah,
and went to high school, went to university. Summer jobs were always on the job site. Came out of university, really didn't know what I wanted to do. I knew I didn't really want to ride on Daddy's coattails. I wanted to kind of make my own path and do my own thing. But at the end of the day, I didn't know anything else but building houses. So that's where we headed, in that direction. And
nice.
So now I have 3 boys of my own. 2 are in the business with me, and my youngest has carved out his own business, doing some glass and glasswork, glass showers, nice. and railings and stuff. So the Jeffery Homes tradition will continue in the future. It
continues on, the lineage.
Exactly.
That's good. What was it about, like early on in your career, as you saw Dad building homes, like what was it that really stuck with you?
I think just a sense of accomplishment when you're done. I mean, the probably the highlight of the whole building process is when I meet people to do what we call a PDI, pre-delivery inspection. Yep. There's my finished product. There's my finished work. We're proud of it. Yeah. And hopefully we did a great job that our customers are proud of the product that we've given them, the service that we've given them. So I actually have one today at 1:30 after this.
Amazing.
So, I'm excited about those days, and I'm excited to see the enthusiasm that people have of moving into a new product. I mean, buying a new house is your biggest investment of your whole life, right? It's an exciting time.
What's most important to you guys? Are you more of a volume game? Or are you more of a boutique builder where you're focused on quality, or a little bit of both?
Yeah, I would. The past, probably our focus is more on subdivision work. But I kind of have a unique term. I kind of say we're a custom home builder building in a subdivision setting. So it's kind of a different
You're blending both worlds
that we're trying to do.
Nice.
We've started to do more customs recently, more just because I enjoy that. I enjoy that part of the business.
What's the difference between a subdivision build versus an infill build, as far as like from the customer perspective? Is it customization? Is it like, what is the difference? I
think more, in the subdivision build, we have set plans, set Schedule A. In a Schedule A is like the elements that go into the house. Yep. We are receptive to make changes, to some degree, more than maybe your typical subdivision tract builder, and that's what makes us a little bit unique in that landscape where we're working. But on a custom, it's a true custom from, I'm helping design the house with the customer from scratch. Yeah. What are your needs? How big should the rooms be? And then there's a lot more time and focus really at every stage with the customer about what are the qualities and elements that they want in the house. A custom build can be trying if you're not doing a lot of work ahead of time. thinking about what's coming up rather than just kind of flying by the seat of your pants, which I think some custom builders do. So we still try and have that premise where we try and make a lot of decisions before we even put a shovel in the ground, because the project will just run that much smoother if people have time and they don't have to make a snap decision for something, you know, that might hold up the production process.
It's a stressful time for some people to say, oh my gosh, what vanity do I need to pick today? Oh my, 2 sinks are one. Like, it's for some people can't handle that, right?
No. And it's really not fair to them.
Yeah.
Right. To put somebody on the spot and say, listen, you know, the electrician needs to know tomorrow. Are we putting a pot light in there? Or are we putting a hanging chandelier? Or what are we doing over that beautiful tub in the ensuite? You know, so I try and be cognizant of that to try and take the stress off people.
So what makes Jeffery different?
Probably just more of a hands-on approach.
Yeah.
You know, we're not a huge company. I'm involved in data operations every day. I'm a face to a name. I have a lot of pride in what we do. You know, my name is on the house, everyone that we build. It's
true. Your signage is everywhere.
So you know, it makes us somewhat unique that we're not just some company out there. It's personalized, and we're accessible to speak to any one of our customers at any time.
Yeah.
So just more of a smaller boutique type feel that I hope customers appreciate.
You know, it's funny because every time I hear the name Jeffery Homes, I've never heard somebody speak ill of a Jeffery home. Like, there's a lot of builders out there who maybe don't put in the time or put in the quality or put in the, you know, the PDI response to an issue. Whereas by the sounds of it, you know, you do. And whenever somebody says, oh, it's a Jeffery, it's usually followed up with, it was a great build.
Well, we appreciate that, Ryan. We've worked hard over the years, and that comes from my dad's lineage and teaching and attention to detail that he passed along to me. But that is one of the biggest compliments that I see in the resale market, that lots of resale agents will put right in the listing that it's a Jeffery built house, right?
Because it holds its value.
That's a big compliment.
It's interesting how that name is synonymous with quality.
Yeah. Yeah. And quality is a funny word. I always hate that word. Because what does it mean? What does quality mean?
I guess it's different to everybody. So then how has that changed your thought pattern in your builds? When somebody says, this is the type of quality that I expect, like, how do you formulate that to say, okay, this is what we're actually going to provide to you?
So I kind of define quality in a couple different ways. Well, one primary way is that anyone can buy expensive material. Anyone can buy 10-inch baseboard versus 5-inch baseboard, or you know, better paint on the wall than, you know, run-of-the-mill builder's paint. Couple examples. So people will say, well, that's quality. In my world, quality is how those elements of the house are implemented, how they're installed. I mean, I use an analogy a lot about we've built townhouses, we've built $5 million custom homes, but that 2x4 that's nailed in the wall by the framer really should be nailed in the same way, whether it's a $400,000 townhouse or it's a $5 million custom home. I mean, it's a way it's implemented and put in, and that's how I define quality.
Interesting. I heard something one time. It was a clothing designer, and they said you can have quality clothing, but it doesn't mean you have style. Right. And I thought, wow, that's really interesting, because it takes the same bricks and sticks and labor to put up a cheap house as it does an expensive one, kinda.
Yeah.
Even though you got like quality materials, doesn't mean they went in right.
That's right.
Right? It takes the same amount of, you know, this room is beige. So like it takes the same amount of labor to put beige on the wall as it does purple. But purple just wouldn't look right in this setting, and beige did.
Yeah.
Right? So, very interesting. In terms of volume, how many houses a year, or how many houses have you guys done in total?
Well, our goal usually is to build 40 to 50 houses a year in the subdivision setting. We kind of work on a one house a week program where we have a house close every week, and then we're starting another one in perpetuity as we're working in the subdivision. But and then we do the odd custom as a fill-in here and there, but just 5 or 6, just for
why not?
Yeah, some of them are favors for friends that we do, and I enjoy that part of the business as well. So
is that the creative side?
Yeah,
that you really enjoy? Is it?
Yeah.
Yeah. What's your favorite part about that?
Again, I think from scratch on a custom home, seeing the needs and the wants that they want, and being able to envision that on a piece of paper.
Yeah.
And then seeing it come to fruition and their satisfaction at the end of the day. So
gotcha.
Yeah,
I want to talk the difference between subdivision builds versus infill a little bit later in the show. Would you consider yourself a developer, a builder, or both?
Both.
Both.
Yeah.
What is the difference?
Well, from a development point of view, you'll start with a raw piece of land.
Mm-hmm.
And I mean, our current site that we're building now is on Harmony Road North in Oshawa.
Mm-hmm.
You know, it was a 50-acre farm 15 years ago when we bought it.
Yeah.
So now we've been able to, from that concept, develop the streets, the lot layouts, the feel of the neighborhood, what that's going to look like. We battle the government restraints that we have to adhere to, and sometimes don't always agree with those, but that's part of the development process. And so from start to finish, you know, we've developed the layout, we've developed the with engineers' help and lots of consultants' help, the layout of the land, and then we build the houses, and then we see a finished product that we've taken from a cornfield to, you know, a nice place for people to live.
That's right. What are you seeing in terms of timeline? How far out do you have to actually purchase land in order to develop a farm into something usable as an end product?
Well, we've been 15 years
Yeah.
doing this one on Harmony Road, and
Is that average, or is that long? Is that short?
I would say that's long.
Yeah.
That being said, though, I don't see it getting quicker anytime soon. This, honestly, this business is not as fun as it used to be.
Interesting.
Things have slowed drastically. The landscape within we work has changed drastically. Pandemic had a lot to do with that. People don't want to hear that excuse anymore, but it is reality in our business and in the government approvals and all that consultant work, that things are just super slow.
What's the biggest holdup, in your opinion, in development today?
Probably municipal approvals.
Really?
Yeah. Yeah. It's been, and an unknown where, you know, we do all the work that we have to do and submit to the government approvals or the different agencies that we have to deal with, and not getting a timeline of when they're going to come back to us.
Yeah.
You know, I use the same premise when I talk to people about after sales service.
Yep.
You know, on their house, is that it's the unknown that drive people crazy.
Sure.
Whatever we do, and the pandemic was the worst thing for that.
Yeah.
So I tell my guys on after sales, let's say you can't get a part and you can't go there and fix that cupboard door or something, or replace that cupboard door for 4 weeks, let's say. At least tell the people.
Sure.
At least they know. They have a time frame. But it's the unknown that drives people nuts.
Yeah, we'll get to you when we get to you. It drives people crazy.
And I'm one of those guys. Right? That unknown from government agency, when it goes on their desk and say, am I going to see this in 2 months? Am I going to see it in 6 months? Am I going to see it in 8 months? I don't know.
Is the politics, in your opinion, now, you know, you'd mentioned this business isn't as fun as what it used to be. Is the politics now more onerous on the developer versus what it was 20 years ago, 50 years ago, when your dad was doing it? How has it changed?
Just the studies, the different levels of agencies you have to deal with. If I had that prepared with me, I would bring a list that is probably ballooned,
Sure.
you know, in the last few years to, you know, 4 pages where it used to be 1 page. And I mean, our government, our provincial government, Mr. Ford, is talking about how he really wants to expedite building of houses, how we need more houses. I'm going to streamline the process. Somehow there's a disconnect from what he's saying to the boots that are on the ground. Yeah, exactly.
Do you think it's actually possible? Because he said millions of homes. Do you think that's actually possible in that 10-year span? Just like physically, with the trades and the red tape and how long it takes to move dirt and all this stuff. Like, do you think it's even in the realm of possibility?
No, not yet. We're not there. No, there's too many fingers in the pie or cooks in the kitchen or whatever you want to say that we have to get through to. And it's not from the developer or builder's point of view. We're ready to go to work.
Sure.
The workforce, you know, you talk about that too a little bit. You're alluding to that, you know, maybe our workforce is declining, and it is. It's aging. But if there's work there, there will be people that will fill those roles for us. So I think if we can get approvals quicker, the houses will get built.
In terms of finding dirt, so obviously dirt is a finite commodity. Like, what is the best way to identify an opportunity, in your opinion, based on what you've seen in the past up to today?
The cost associated with the dirt that we have has grown astronomically from what it was. More dealings with the banks ever than before, because the numbers are getting much bigger, which makes the bank much more involved than ever before, and they are much more onerous than they've ever been before.
Yes.
So I don't know if I answered your question or
you
not.
Did.
But
for sure. I mean, cost. How much do you pay for the dirt? When you buy by the acre and sell by the foot, like, it's math. That's right. At the end of the day, it's math.
Yeah.
Right. And do you think that it's truly a trickle down? So if the developer has to pay X amount per acre, that ends up going to the consumer by paying X amount per house? Or do you think that the consumer is set to say, I can only spend this much on a house, and if you overpay for your land, that's all I can do?
Yeah, I think so. We talked about maybe affordable housing is kind of the buzz thing for right now. And that, this next generation is saying, my kids, they can't afford a house anymore where I could. So affordable housing, I don't know if people quite understand, but that just gets passed along. I'm the developer builder. I'm not eating $30,000.
Sure.
So it'll go to the end user, and every builder developer would be the same.
How long does that take to trickle down through? Because if you say, okay, July 1, $30,000, this is like a sunk cost and whatever. But like for somebody who's already sold the house, right, to the end consumer, they already paid last year's price, but they don't take possession until next year.
Right.
That $30,000 comes from where?
Well, builders are being wise to this now. Because of that they'll have a clause in the purchase and sale agreement that says it's beyond our control. Something happened, was implemented on us, and we're going to pass it along to you on closing. That's a big surprise.
That is, because a lot of people don't have the cash.
They don't.
To come up with that. And the bank says, well, it's not our problem. What do? You're stuck, right? Yeah. Like, do you remember when COVID came in and people were, jumping ship left, right, and center? When the buyers of these houses were saying, oh, the market went up, life is great. The builder was going, oh, darn, I lost out on $100,000 worth of lift or $200,000 worth of lift per house.
Yeah.
Well, then it went the other way, and the homeowners were saying, well, we want a refund. And it's like, well, it doesn't go both ways.
No, it only goes one way in our business. I got caught. We just did 37 townhomes in Port Perry.
Yep.
The last closing will be next week, so the end of May here. But yeah, the first 27 houses that we sold there, I sold prior to pandemic. Looking back now, way too cheap. And I got caught where, my production costs of building the houses skyrocketed.
Sure.
I did not make the profit margin that I should have. But it's not like I'm going back to you, Ryan, as my customer and say, hey, listen, lumber went up by 60%.
Yeah.
I need another $40,000 to, you're going to tell me go jump in the lake.
Sure.
Right? That's not my problem.
That's right.
However, when it goes the other way, where, the price escalated and I know some people have flipped these townhouses and made, $250,000, $300,000, which is
just trading the paper. Yeah.
Way more than I even had, as a profit margin from the beginning. I can't go back and say, well, give me another 40.
Where's my cut? Yeah.
Where's my? So it only goes one way, and that's disturbing in our business. But
so let's talk about the downside risk. I don't think enough people talk about. I'm such a big advocate for what is the upside potential and what is the downside risk, right? On every project, in every aspect of business or in life, right? Let's talk about the downside risk of actually doing developments, being a builder. What do people not know?
I don't think they know the hidden costs that are involved in the house and why are the houses so expensive. A perfect example would be HST rebate. Yeah. So in 2010, the provincial government and federal government got together and they amalgamated the PST, which is a provincial sales tax, and the federal sales tax, and created an HST, and it went from a 5% provincial to a 13% HST.
On a house.
On a house. So, and that was the first time that it's been charged on a house. So
There was no PST on a house prior to 2010?
No.
Oh, I didn't know that.
No.
On a new build. I started in 2012, so this was pre me.
Right.
So I'm learning. This is good.
So I wrote a couple things down. So back in 2010,
Yeah.
the average price of a home in the GTA was $409,000.
Okay.
So they did a rebate that said if you went above the $450,000 threshold on your house, you get $24,000 back as a rebate, which everyone thought was great because the average price of the house was $409. It was under $450.
So it's pretty much a wash.
Everybody's going to get the rebate.
Yeah.
Fast forward to 2013 or to 2023, where we are now, the average price is over 1.1 million. The
rebate's the same.
It's the same. It hasn't
the same 24 grand.
So now the government, and they're not in any hurry to change this because they're now making 3 times the tax that they did when this initially came out. So it's one of the big things that the Home Builders Association has been advocating for years here is that you need to catch up because this isn't right anymore.
I'm surprised there's no CPI on that HST. Like, what's the cost of inflation from 13 years ago versus today? Even if you took 3% into consider, which it's usually higher than that, but like even if you took that 3% CPI, like start adding that to the HST, and I mean it would help. It probably wouldn't stay true to what it was, but I mean it would help.
And that's part of the argument is that the Home Builder Association is saying is just follow an index and follow the path of normal inflation. But they refuse to do that.
Well, they do that with their building permits, and they do that with a lot of fees and servicing and so on, right? It follows the path.
Right.
And this year I think CPI was like 7%.
Yeah.
So like claim 7%.
Yeah.
But I mean, there's no way with the price of diesel fuel, you can't tell me that 7% is the true number. I just don't believe it.
No.
I just don't.
I agree. Yeah.
Interesting. So that's really interesting about HST. Now, when you buy a house, for the people who are buying vacant land versus tearing down, there's an HST consequence there. What does that look like?
I'm not really familiar too much with the infill kind of thing, and tearing houses, down to build. I've did a couple of those, but the HST on a new home is kind of hidden. It's hidden within the purchase price.
Yeah.
So it's not something at closing that people see a number and know what it is, because builders have decided that we would sell houses with HST included in the price.
Because people are more comfortable with that?
I think so.
Okay. Do you think it has anything to do with lending?
Yeah, probably.
Yeah? Like the bank would finance that portion of the HST if it was in the purchase price, assuming that the house appraised?
Yeah.
Is that fair?
Yeah, I think that would be fair, yeah.
Yeah.
And a lot of times too, the builder looks after the rebate for the customer. Right. So you don't have to do the paperwork as my customer. You don't have to apply to the federal government to get the rebate back.
Sure.
Essentially, we factor in that rebate, the $24,000, in our purchase price to you, banking on it coming back to us. So I explain it to my customers to say, really, and we have paperwork that you sign that says you're assigning your rebate over to us.
Sure.
But that's a $24,000 that you don't have to put in your mortgage, that you don't have to approve for when you go to the bank or to the lending institutions for that. And essentially, we wait for the rebate rather than you. You don't have to put the money up front and then wait for it to come back.
So if you sold the house for $1,024,000, you'd actually sell the house for $1 million and say the $24,000 from the government comes to us later.
Correct.
So you net out as you need.
That's how that works.
Interesting. Okay. Yeah. In terms of how you did with the property where you got really thin or took a loss on or whichever.
Yeah.
I mean, like what do you do in that circumstance? You just absorb it and move on, or?
That was kind of my attitude. I mean, there was a lot of talk through Terry on the warranty program where there were some builders in the GTA that were really caught and didn't want to honor the contract
of the sale of the house.
Sale, yeah. Wanted to delay. Hopefully the people walk away from the deal because they don't want to build it for what they sold it for, because they were going to be upside down at the end of the day. So there were bulletins from the warranty program out to new home builders to say, be careful doing this. This is not ethical. You could open yourself up to some legal action.
Yeah. Did that end up happening? Was there lawsuits over?
I think there were.
Yeah?
Yeah. I didn't delve into too many details on that, but in my mind, I just said, I've signed a contract with you, Ryan, as my customer. It isn't your fault that the lumber went up. It's not my fault either. However, that's the risks
Here we
of
are.
me doing business.
Sure.
Right. So, yeah, you eat it and move on.
Do you keep any of these properties that you build? Like, are you a landlord at all, or do you primarily build to sell?
Primarily build to sell.
Yep.
I did build some townhouses in Bowmanville that I have for rental. That's a whole other issue. That's a whole other business that you need to be prepared for if you plan on heading that direction. I mean, the landlord tenant board is broken. It's in shambles. You know, that's a sore spot for me.
I am aware. I am aware.
Where I
Yeah.
have a tenant, that hasn't paid me rent in 7 months.
Sure.
I get them to the landlord tenant board to say they need to move out or pay.
Yeah.
Takes 7 months to get there. I got there. They couldn't hear my case that day because I ran out of time.
Mm-hmm.
So we have to reschedule. Well, 2 days ago, I just got my reschedule for August.
Yeah.
So it's been almost a year
Yes.
of people living in my property, not paying any rent, and I can't do anything about it.
Doesn't that suck?
So that's a deterrent for a new home builder like me to build a purpose-built rental property, which is in great need.
It is.
Right?
It is. Whoa. Before we get back to the episode, don't forget to sign up to the VIP newsletter at thehighestandbestuse.com. You get great tips and tricks there, completely free. Also, don't forget to grab a copy of the book at thehighestandbestuse.com, Amazon Chapters, Barnes & Noble, all of these places. That's where you can get it. You can get it in paperback, ebook, hardcover edition, as well as the Audible version too. So if you like to consume content by audio version, grab that. If you like paper, grab it there too. And now back to the episode. Not everybody can afford the $1 million townhouse. That's just what it is.
That's right.
Right? And it's dirt plus bricks and sticks plus labor and profit.
Yeah.
Right. And this is what it is. Do you think that people in the construction industry, whether you're developing or building or both, are making obscene amounts of money such that it's unfair to the public? Or do you think that every business has to make profit in order to be in business next time?
Yeah, I think that's a misdemeanor. I mean, everyone thinks, the builder developer is super rich,
Right.
and we can just keep taxing them. And municipal government keeps doing it.
Right.
They keep adding to the DCs, which you're probably well aware of, and they just keep going up and going up and going up. Well, the well is getting dry to the point where, builders and developers are going to start to pull back and not be as active because
I think they're doing that now.
I think
they're saying, well, hang on, if I add up all the costs versus what did I pay for the land, and like this is all the consumer can afford to bear because of the interest rates or the banks or whatever.
Yeah.
I mean, like you start carrying the two and you're going, hang on a second here. Right? How do people in this industry, how do they absorb that? Or how do they move forward? What do they do?
And it's a huge risk. As we talked about earlier here about how the numbers are getting bigger and bigger and how the risks get bigger and bigger when the numbers get big. And builders and developers are going to say, I'm not going to take the risk anymore. If I can't, if I can't get over 10%, let's say, as a number for profit, then I might as well not get out of bed in the morning, and I'll just give my money to a hedge fund or something like that.
Yeah.
And
put it in the market and roll the dice.
Yeah.
Yeah.
That kind of thing. So, and this latest turn, like my townhouse scenario,
Yep.
that went the wrong way, went the different way so that's a risk that a builder developer takes every day when he sells a house.
It's true. Do you think, and I've been thinking about this for a long time, the market's been going up. It washes out a lot of problems that people have, whether it's a bad tenant or an inefficient build, or they're delayed with their materials, or maybe they're just not very proficient at what they're doing. Right? Do you think that carries a lot of people through such that all of the problems disappear and everybody looks amazing? Or do you think that at some point that maybe isn't so? And if the market goes flat or goes down like it has been, it's going to wash a lot of people out.
Mm-hmm. Yeah, I think you're right on track there. I think this generation of people have never seen really a downturn. We talk about interest rates and how they're up at 6-7% now. Well, my first house in 1987.
Oh my God, I know where this story's going.
but I mean, I got a 5-year mortgage at 12.25.
Yep.
And I was so happy. I was jumping up and down,
Sure.
and I locked in for 5 years right away.
Yeah.
But you tell somebody now of your age,
Yep.
let's say 12.25. Well,
They fall apart.
They fall apart.
Yeah.
So
Can you imagine 12.25 on $1 million house?
Yeah.
Oh.
It's crazy.
You couldn't do it, right?
Now, I mean, the mortgages are much, much higher
Yeah.
these days than they were back in my day when I bought my first house. But still, money at 6-7% is still, in my mind, cheap.
That's so funny. Perspective is everything, right?
It is.
What would a mortgage have been back in your day? So late 80s, I was born in 87, right? So you bought your first house when I was born.
Yeah.
What would a house have been worth at that time? Average sale price?
Well, I bought the lot for my dad for $38,000.
Oh my gosh, that's like a bathroom renovation today.
Yeah, exactly.
Yeah.
Yeah. I sold my 83 Ford Mustang, and
Yeah.
my wife sold her 74 Volkswagen Beetle.
Yeah.
And we got enough money pooled together
too
with our
funny.
savings to buy a lot at $38,000.
Wow.
So-
And then to build that house at that time would have been what, roughly?
I remember I had a $100,000 mortgage.
I was going to say, yeah, 100 grand.
Yeah.
Wow.
So, I mean, the cost of the house might have been 200 at the time
Sure.
or something. And I'm sure I got a deal or two.
That's too funny. Yeah.
As
You knew a
bigger
guy.
Son,
You
I
knew a guy. Yeah.
That's right. But yeah, things are totally different now.
So affordable housing wise, do you think we could ever go back to something like that where somebody could afford to buy a house for 200 grand, 300 grand, 400 grand? Is that even in the realm?
Not here.
No.
Not in Durham region. You know, I scratch my head all the time and wonder, we have a huge country of Canada. Why do we all want to live in the gold, like 30 miles from Lake Ontario?
Yep.
Like, are we all crazy? Like, why do we want to live in this area? And all it does is drive the prices up for everybody.
Sure.
But that's where we all want to be. That's where all our amenities are. That's where all our friends are. That's where we want to live. And we don't want to live up in Haliburton, or we don't want to live in Parry Sound,
Yeah.
you know?
Do you think infrastructure has a lot to do with that? Buses, transit, aircraft, shipping,
For sure.
municipal servicing, all
Yeah.
that?
Yeah, I think it does.
Yeah.
Yeah. And although, you know, our country is really big geographically, you know, when you look at the U.S. and how, you know, they're much, much bigger housing market, much bigger cities, much better amenities for that kind of thing. They have better locations for that, where we're just more of an underdeveloped compared to them geographically. And so that's where we all want to live. We want to live where all those amenities are. And there's not that many places. There's just a few pockets, you know, the big cities that we have.
So for these few pockets, that's where the infill build guys, they come in, right? Obviously, the governments want intensification on existing infrastructure because it's already there. They're saying, hey, just tap in, build the house, and we're good, right?
Yeah.
What are your views on infill versus subdivision?
Well, I think it's badly needed in the centers. I mean, there's a lot of old wartime houses that are falling down, and they should be tore down and build a triplex there for people. And again, we talk about the rental need. It's huge. We need that. We need it to keep our buses running and have the seats full and so on. So I think in an infill situation, it's definitely needed. You know, I battled a little bit and I lost the battle in my subdivision on Harmony Road, where, you know, traditionally we've built subdivisions that have bigger lots, 50 and 60 foot lots, little nicer houses with sometimes triple car garages. I bring that concept to my subdivision on Harmony Road and get completely shot down.
Really?
No, not enough density.
Not enough houses.
You don't have enough density. You don't have enough people in there. You got to have your lot smaller. We need more intensification.
We want 30-foot lots. Yeah.
And so I struggle with that a little bit and say, well, what right do you have to tell the new generation that they can't have what my generation had?
True.
Right? Why can't they? If there's a demand for people to want that, that's what they grew up in. Can they afford it? Some can. Why can't we offer that product?
Yeah.
And they just say, well, that's the way it has to be now.
Interesting.
So I lose that argument.
Yeah. So for all of the bigger homes that you want to do custom, you have to go infill, tear down, rebuild, buy that 60-foot lot and say, this is where we're going to build the nice product that people really want.
Right.
I shouldn't say it that way. The custom product that people really want, as opposed to a subdivision, you're limited by lot size, which limits your build form.
Right. Yeah. You know, I can't say I like driving down the street and seeing overhangs of houses almost touching each other.
Yeah.
You know, that's not what I grew up in.
We're going to share an eavesdrop. Okay. Yeah.
You know, but lifestyle of people is changing too. You know, and I see that with townhouses. You know, they don't want the yard maintenance. They don't want the extra work at home. They're too busy doing other things, or they want to just spend more time recreationally than they do working around the house. So maybe those things that were important to our generation aren't so important to the new generation.
That could be. I mean, I try to put myself in the shoes of days gone by and say, okay, what was it like then versus what is it like now? Like now,
Right.
we can go on Amazon and order a bag of kitty litter and it's here tomorrow, right?
Yeah.
Whereas 20 years ago, 30 years ago, 50 years ago, you have to go to the general store or the Walmart or whatever, physically be there present. So like we're buying back our time now with something like Amazon, whereas before we didn't have that time. But maybe cost of living is higher now and we have a cell phone, right? Whereas you didn't have those opportunities before. So I'm always like, okay, what was it like before versus today?
Right.
You know, and how has that evolved? And the same thing goes for housing. I mean, to think about buying a house for 100 or 200 or 300 grand today would be just unfathomable.
Yeah.
You just couldn't do it.
No.
Right?
No. You get a basement apartment maybe.
That's right.
For that, right?
That's right. Do you do condos as well? Any high rise?
No.
No.
Haven't ventured
Strictly
into
low-rise.
that field. Strictly low rise, and don't plan on it, to be honest.
Yeah.
I feel like I'm too old to learn that at this point. Maybe my boys.
Your kids, yeah, they'll
my
take
boys
over.
might take over
Yeah.
and head down that direction. And we do have at our new site on Harmony Road called the Views, because we're at the highest point of Harmony Road, so our views of the Toronto skyline.
I love that.
It looks great.
I love that.
But we do have a high density site there, and again, I lost the fight on the development process because I said that's not what I do. I don't do high density.
Sure.
But provincial and municipal regulation said no, you have to earmark that part of your property as high density.
Which would be for a tower.
Yeah.
Wow.
So they're saying minimum 10-story tower.
Yep.
But
So do you sell that? Do you sell the dirt? Say, okay, this is what it's going to be. This is zoning. Sell it off to somebody else,
Yeah.
or do you keep that and you're like, you know what? I'm just going to tuck that in my back pocket for now, and maybe one day.
it'll be the last thing I do in our property there. You know, our first phases are the low rise that is our specialty, and
Right.
and that's what we're doing. So our biggest lots now are 36 and 40-foot lots
Yep.
in the first couple phases.
Gosh, it's almost rare to get a 40-foot lot these days for a new build.
It
right?
is. It is. That's right. And then we'll do some 30-footers in probably a third phase. We have a townhouse section that we'll do in subsequent phase. Mixed use area where we're going to have to do some sort of a commercial component as well as a residential component.
Yep.
So I'm looking at doing that. What kind of building would that look like?
So we're talking like restaurants, convenience stores, dry cleaner, things like this?
Yeah.
Yeah.
Yeah, maybe maybe a little bit smaller scale, but something where, you know, maybe I do an 8-story or a 6-story wood is somewhat
Yep.
appealing to me, and a new built form that the building code is embracing here in
Sure.
Ontario for the last 4 or 5 years, I think. But something where you have some commercial on the bottom and then residential on
Yeah.
the subsequent floors above. Townhouses, maybe in the same plot of land that I'll do. Looking at some real energy efficient stuff there, maybe some geothermal
Yep.
that would heat that whole area. Enbridge, I've
Does
been
that
working with
pay?
them.
Does geothermal pay? Does a lot of this green initiative stuff pay? Because the jury's out.
Geothermal doesn't pay
Okay.
at this point.
Okay.
But what we're doing, we're building all our houses Energy Star certified.
Sure.
That pays
Okay.
within a 10-year span. So I wouldn't do it if it didn't, because I need to be careful what I say here, but I don't
Sure.
build energy efficient just to make me feel good.
Right.
I think you need to do it so that the numbers make
It's
sense.
a function of economics
100%.
all day.
And Energy Star does. The way we're building our houses to that Energy Star spec, you will get the payback within 10 years.
It makes a big difference when you do it up front and you can amortize the extra insulation or the whatever, the triple glazing windows.
Right.
When you can amortize that over time. But I mean, like, I think there's a big misnomer in the industry, and please, chime in, is like people will go and they'll retrofit their home, right? All new windows for 20, 30 grand, all new doors for 10 grand. They'll blow an R60 in the attic for 3 grand or whatever it is.
Yeah.
Right. And by the time you're done, you save like $40 a month on your gas bill.
Yeah.
And you're going like, what the heck just happened?
Yeah.
Right. I've been through the process on so many renovations, retrofits, all of this. And they go, yeah, but you're going to get $2,000 back at the end of the day. And I'm
Right.
like, yeah, but I just spent that on spray foam in the basement. What
Yeah.
about all of the rest? Have you been through this before? Like, is this where your thought process is coming from?
Not so much on the renovation side.
Yep.
But I think it does make sense when you're building from scratch.
Right.
obviously it's much, much cheaper to do it when you're building, initially, and you build it into the built form from day one.
Right.
So I think it does make sense on new, building on new. I'm not sure, like you say, maybe you have more experience on the retrofit side of things. It might not make sense, but it definitely does on building new. And one of the things I guard against is, Energy Star has been kind of a moving target. The specs for Energy Star have changed quite a lot.
Oh, really?
Over, Energy Star came out in a while ago. I'm not good at dates, but I built the second Energy Star certified house in Canada.
Really?
In Whitby.
No way.
As a pilot project with some consultants out of Ottawa.
Is this the same Energy Star that they put on appliances?
Yes.
And computers and things? Yeah.
Same thing. Yep. So that spec has been ever changing, and I've been involved with helping to guide that spec along the way, just because that's kind of my forte, and I like to be there. And I always guard against the fact that it has to be affordable. If it's not affordable, then it doesn't make sense. And like you just said, it's numbers that need to work and make sense, and see that you're going to get a payback within 10 years. And that's kind of my threshold. If it's more than 10 years, I'm not sure it's worth it.
Sure.
Right. And now that's at today's cost and at today's hydro rates and gas rates. And I guess we all think they're going to go up. Nothing ever goes down. Yeah. But, and then it gets more attractive as those rates get up. But, you need to be careful. The regulators need to be careful that they don't overspec the houses to meet the Energy Star requirements, and then
you can't afford to build it.
You can't afford to build it, and people won't pay for it, and the savings and the program dies.
Yeah.
So they need, it's a fine line there between saving energy, doing the right thing, building green, all of those catchwords and phrases that you hear about. But again, if it doesn't make sense numbers-wise, and geothermal is one of those that in my point of view now does not make sense. It's too expensive from the get-go that you're 20, 30 years on a payback.
30 years is a long time.
Absolutely.
And it can break in 30 years, and you got to go and redo a pump, a line, whatever.
Right.
Dig up the driveway, and you're like, oh, there goes my profit.
Yeah.
Yeah.
So, I mean, there is a comfort component. There is a feel-good component as a customer that I'm doing the right thing. I like what I'm doing. I can tell my friends that, I'm ahead of them. Yeah. There's all of those things.
You can't compete with ego when it comes to math. Like if you just, if you want the fastest car, the biggest whatever, the nicest house, cool. Yeah. But that doesn't mean you made money with the thing, or it doesn't mean it's a profitable enterprise. It's an ego play.
Yeah.
Yeah.
And if you're okay with that and it makes you feel good, then
drill the holes. Yeah.
That's right. Yeah.
In terms of profit, so where do you think most of the money is actually coming from in terms of construction or development? Is it coming from amortizing over time, the appreciation in the market? Is it coming from the zoning? Is it like where do you think it's derived from?
Well, appreciation in the market.
Yeah. For
sure. I mean, I'll guard against that because I've been through recessions.
Some cycles,
yeah. And I'm not sure the generation that we're in now has ever seen that.
Yep.
So they never think anything's going to go down. But historically, over time, you can't make money any faster than through real estate. I mean, argue with me, Ryan, and tell me I'm wrong, but I don't think you can.
I'm very interested to hear your perspectives on this because I'm such a real estate guy versus stocks or versus businesses or what have you. Like I'm real estate through and through.
Yeah.
So elaborate, please.
And I say you're on the right track.
Oh, great.
I say how in the world, I mean, we all want to make money, and again, it's not the be all and end all. There's lots of other qualities in life than making money, but as part of my philosophy is you can't do it any better than through real estate. I mean, who would have ever thought when a pandemic came on that people would make $250,000 on a townhouse in Port Perry in 2 years? You going to make that in the market or any other way on something you have no control over?
Yeah.
Sign me up for the real estate every single time.
That's right.
Right.
If you took a piece of like a farm, right? Like your 50-acre farm, for example.
Yeah.
You took that, you acquired it, all of the carrying costs and so on. When you bought the land, was it serviced? Or was the sewers even close to? No? Okay. So you had to wait for the services to get to your lot line so that you could bring them in.
Right.
So when you bought that farm, if you carried that through to today, and it's kind of math heavy, so if you don't know, I understand. No zoning in place for what you're building, the 30 to 36 to 40 foot lots, versus previously agricultural. If you took all of the inflation away in the market and what's happened with real estate, how much do you think was attributed to you getting the zoning right versus the market just going up and just pushing prices like crazy? On a percentage basis, not dollars.
I'm not a numbers guy, Ryan. So,
okay. Come on, you're a builder developer.
I know. But I'm more of a boots on the ground.
Okay.
Construction.
Swinging the
more
hammer.
Of a guy.
Yeah.
But appreciation of the land and the location, and that it got, into the urban boundary and all of those things. That's what makes it viable.
Interesting.
For sure.
Interesting.
I would think. And I see that too when, we talked a little bit about financing and dealing with the banks. Because I bought it, my dad bought it actually before.
Really?
He passed away 10 years ago, but him and I bought it together before that. There's equity there because of what's gone on in the market, in the real estate market, and the
even net all of your carrying costs and all that stuff.
And the bank is much more receptive to work with me.
Less risk.
But talking to some other people, that if I was to go buy that 50 acres right now at market price, and then have to work with the bank in order to build houses there and sell them at this purchase price and so on, the margins are much, much tighter. Really? Much, much harder to deal with. And the bank is much more restrictive on what they're going to do. So, so if you can find that piece and make that play, then you're in good shape. If you have, the resources to be able to hang on to something, invest and hang on. I mean, 15 years ago when we bought it, we thought it was a lot of money.
No doubt.
Right. So
a 50-acre farm then is expensive. 50-acre farm today is insane.
Right.
Yeah.
But it still was
Were you institutional money at that time, or would you be institutional money today for that same piece of land?
You'd be institutional money for sure.
Yeah.
Yeah. Yeah. Just the costs have escalated so much that you can't do it on your own anymore.
When does it convert from, okay, this is the best use as a farm versus now this is the best use for a subdivision? At what point does that transition take place?
I think probably, when the services are there, basically the municipality kind of dictates that.
Interesting.
I had to wait for the two farms that were south of me to go before our piece was ever ready to go. So as the urban boundary moves out, and as we talk about, we need more housing. They talk about they want another, I forget how many houses, I wrote down a thing, 5.8 million new homes in Canada is what they want by 2030.
Okay.
So where are you going to build them?
It's a lot.
It's a lot.
It's a lot.
It's a lot of houses. So some of that land has to open up to allow us to do it. We can do the infill thing like you're talking about, which I'm all for, because the infrastructure is already here for all that. So let's tear down those 50-year wartime houses and build some triplexes, which makes sense. Yeah.
Well, that's the new trend, right? With the Bill 23, they're saying, hey, we want more density. Put in 3 units.
Yeah. And I think that's a great thing to do. Cut the urban sprawl if you can and intensify where we are. But people still want, the 50-foot product or the 40-foot product that we talk about now, and we need the land to do it.
If you took two 40-foot lots, making an 80-foot lot of frontage, right? If a 40-foot lot sold for, pick a number, $500,000, would an 80-foot lot sell for $1 million? No,
I don't think so.
Why do you think that is?
I don't think people just see the value. They won't pay. And I would say that relevant to my where I look at lot sizes and say, I could have a 40-foot lot or I could have a 45-foot lot.
Yep.
That extra 5 feet at 10,000 front foot, let's say, that's $50,000 just for the land.
Yep.
How does my house change between a product on a 40 and a 45? Well, maybe with those extra 5 feet, I can have a bigger foyer and I can have double front doors instead of a single door. And but will people see the value and pay for that? my experience is that they won't. They won't pay that extra.
Yeah.
So,
so the builder's incentivized to go with a smaller lot because it pays better and the government gets more intensification.
but then now just thinking out loud, your scenario where you've gone from a 40-foot lot to an 80-foot lot.
Yep.
Now your built form on an 80-foot lot can be totally different
Very
than on a
different.
40.
Yeah.
Right? You can have your 5-car garage.
Uh-huh.
Right? You can have all those, maybe a separate coach house or something for the in-laws to live in. It gives you a lot more flexibility when you have that kind of space.
Sure.
So from that point of view, maybe people would pay more.
Interesting.
So I guess
because you get that custom product.
right. Yeah.
Wow. You know what? It's interesting because two very different businesses, infill versus subdivision. You've got more density versus custom built. You're in the same realm of bricks and sticks and mortar and
Right.
drywall and all of this.
Yeah.
But and the same business, but it's different. It's the same, but it's different. Right? Is this like an internal battle in your head every day? Like, okay, what are we going to do next? Or are you like, no, I'm a subdivision guy, just a couple infill builds every here and there, and that's it.
Probably the former, that I'm a subdivision guy.
Yeah.
Right. I enjoy working in that environment. I have control. I don't have to deal with a neighbor. I don't have to deal with wrecking a guy's driveway. I don't have to be working after hours.
Yep.
Because of the traffic on the street. Just not where I want to be.
Yeah.
But so I like the subdivision setting. It's easier, I would say.
Yeah.
It's probably easier.
Yeah.
For us.
Are you able to order in bulk? Like instead of going to Lowe's for a 2x4, you go right to the manufacturer and say, hey, I want 200 skids of 2x4s and send them tomorrow. Are you able to order in bulk?
Not really.
No?
No. We're able to lock in pricing.
Okay.
Well, I should say we used to be able to lock in pricing.
It's pretty dynamic now, right?
We can't now.
Yeah.
If I get 30 days on a locked in price, I'm doing well. I just don't have the space. Where am I gonna house that stuff? But I deal with some on lumber, if we're talking about lumber and 2x4s. They'll say I can commit and say we're gonna commit to 30 houses that we're gonna build.
Yep.
Here's the takeoffs, here's the amount of stuff. So it gives my supplier some direction to say, I can lock in 3 train loads of 2x4s. He's going to house them in his space, which is good for me.
Yep.
And we can lock in the price, and then we'll use them up as we go.
Sure.
So from that point of view, I guess we are buying somewhat in bulk. But,
sure. You're like Costco for lumber.
Yeah, somewhat.
Do you think that's where some of the margin can actually come from? Because as you grow and you do something, you got a lot more overhead than somebody just building a single family home in town.
For sure.
You know what I mean? So as your back end grows, you've got to make that up somewhere. Does that help compensate for some of that?
Yeah, I think it does.
Yeah.
Yeah, 100%. Yeah. And I think that's somewhat where I might have a leg up on some custom home builders when I do my customs.
Volume.
Because I'm doing some volume in the subdivisions, and
True.
usually I pass along those savings that I'm getting by buying volume for the subdivision to my custom guy too.
Sure.
Where, a custom guy that only does 5-6 houses a year doesn't have that advantage.
That's a good point.
So I think that helps me in my custom build, and I pass that along to my customer, which makes them happy and and helps the whole process run smoothly. So, but yeah, back to a subdivision guy. I mean, that's where I like to be. We have a new piece of property going to come on stream in the next couple of years. Again, I'm bogged down with municipal red tape and approvals and so on, but a place up in Bobcaygeon where we've bought 113 acres up there. I'm going to do some custom homes on 2-acre lots. Ah,
very nice. Why bigger lots up there? Do they need well and septic? Is that why?
Yeah.
Okay.
Yeah, we need well and septic. But I think the play there for me as well is that I want to do separate coach houses.
Yeah.
So now I think there's a real need in the marketplace for mom and dad are getting older, they're retiring. Definitely. They don't want to go to the old age home.
Yeah.
Nobody wants to go there if they don't have to. And maybe the kids don't want them to go there either, but they want them to be close. So both, the young kids and the mom and dad sell both their properties. They amalgamate their money. They can live on the same property yet separate, but they're there to look after mom and dad in their aging years. You got a built-in babysitter if you're there, a younger family that's there. So I think there's a real market for that.
And my gosh, 2 acres, that's plenty of space.
Absolutely.
For a coach house plus a principal dwelling, tons
Yeah.
of space. And you know what's good about that too is, like, we talked about economies of scale. Like, when you're doing it, obviously the coach house and the house is going to be on well and septic. So, like, to put a couple extra weeper runs in, if you have to function off of the same septic,
Yeah.
like, the backhoe's already there.
Yeah.
The pipe is already there. The stone guy's already coming. A few extra weeper runs, no big deal. But if you go and do that after the fact and you have to go and dig up or verify the septic, that becomes very problematic.
Yeah.
Because, most septics out there, they don't have any paperwork anyways.
That's
for
right.
these older homes, right? And people go, well, verify the septic, and you can't, which means you're into 20, 30 grand for a new one.
Yeah.
The math doesn't work.
Yeah.
You're back into the same thing as the Energy Star rating, where, like, you have to go and retrofit and the math is offside again.
Right.
So the fact that you can do that with Jeffery Homes up front is a bonus.
Yeah, I think so. Yeah. So we plan on that in the next couple of years, and I think that'll be a good market for us and for people. And Bob Cajun is not that far north, but
True.
And again, the pandemic, we've all learned that people can work from home.
Yeah.
Or say they are.
Yeah. How'd you get the zoning right on that parcel?
Well, I'm going through that right now.
Because it was probably agriculture, I'm guessing?
Was, yeah.
Okay.
Yeah. So, yeah, and the the provincial government now is very receptive to this.
They want it.
They want it, right? It's a definite need. So the opportunity is there for us now. Now, if the government was to change in 3 years when there's an election, that could change. Mm-hmm. But I think it would be stupid to change because it's a built form that is in demand. People want it.
How do you figure out how many pieces of land you can get or how many parcels you can get on 113 acres? Is there like a rule of thumb that you go by?
I kind of said 2 acre was kind of a minimum size.
Yep.
I wanted that feel of more space, an estate type subdivision. Mm-hmm. You're not on top of your neighbor. So I kind of said, we looked at a couple of different scenarios with 3 and 4 acre lots, and I thought, no, those are too big.
Yeah. You have to maintain it.
You got to maintain it.
Our first house was 2 acres. My God, it's a 6-hour job to cut the grass on a Saturday.
Right.
Geez,
yeah.
Need a bigger tractor.
Gets old after a while.
After a while.
Yeah. So it just kind of the feel that I could feel that the subdivision at a 2 acre lot would be about right.
And would these be road frontage or do you have to service the land?
We have to service the land.
So there's internal roads, cul-de-sacs, that kind of thing.
Yeah.
Right. So if you look back and say, okay, we've got this plot, 113 acres, how much of that space gets attributed to sidewalks and roadways and hydro transformers and post office boxes and like all of these things that just eat up at how many parcels you can create?
Yeah. Well, you do those calculations of what you need. Mm-hmm. In there, because it's a rural setting, it's really not going to be, there are no sidewalks.
Oh.
Just be like open ditches.
Interesting.
Sodded, nice ditches where the water tributaries go. And we're designing a lot of LIDs, low impact development, so that there is a wetland area too. So we're not impacting the wetland,
right? And
we're able to get our stormwater to go into those areas, but it's controlled.
Yep.
So from that point of view, because it's a rural setting, you're in Bob Cajun, you don't expect to have those kind of amenities at this point, right? You're still going to get your mail. Yep. You're going to have a mailbox at the end of your driveway, and the guy's going to drive up and put it in your slot for you.
Sure.
And so that's kind of old school.
Yeah. Right? Wow, that's so different than the city. Because in the city, you go and do a plan of subdivision, it's like, oh my God, see you in 5 years. You know what I mean? For all of everything that goes into that, it's very different.
So maybe all these people that bought a house in the last 5 years before the pandemic, and they've made
a boatload of money.
Through the
go to Bob Cajun.
They cash out and go to Bob Cajun.
That's right.
And mom and dad will come with them.
Do you sell these open market, or do you typically put up like a sales center and say, this is the model home?
That's my plan, yeah.
Yeah.
I'll put up a model home.
Model home. Is that less money to do a model home than it is to sell it at like 5% plus HST for commission?
I never really did that analysis before, but
I'm always curious.
It's just that's what I've grown up to do.
Sure.
I think it's the right way to sell houses, showcase your work,
yep,
and let people touch and feel and see what you do. Have a decor center that people can go through. So I like that aspect of it. I like to have my sales office in something that we've built.
Sure, and it's an actual home.
Yeah,
not temporary like the real deal.
No.
Yep.
Yeah. I've did the sales trailer thing before in the past with developments, And it has its place and sometimes needs to be done.
Yeah.
Again, we go back to the banks and their requirements to make sure you have so many pre-sales before they're going to give you the money. And
sure.
So you're forced into that sort of thing. But ideally, I like to build what you call the sticks and bricks and the drywall and the mortar and show people this is what we can do.
Awesome. As we wind this down, last question, what keeps you motivated? You've done so many homes and you've done so many customs and you've done so many subdivisions and you've done so much in your career and your lineage as a Jeffery product. What keeps you motivated to continue doing the next one?
Probably just somewhat the family legacy. We've got boys that are interested and want to continue that on. My dad gave me the chance to move forward with it, and I took it and ran with it. And I have boys that are motivated as well and want to keep doing that. And then I go back to the PDI thing that I'm going to do in an hour from now, where I see that satisfaction on the people's face, and that to me makes it all worth it.
Very cool.
So enjoy it.
Very cool. Well, from the side of the mic, I really appreciate being here. I can tell your passion for the industry. I can tell your passion for your product. Just the fact that you do your own PDIs and the fact that you're doing this basically for a smile on somebody's face. It's not about, obviously it's about money at some point, but it's not about the money. It's about the satisfaction of doing, this is what I built. People are living in my homes.
Right.
And you like that.
Yeah.
And that keeps you motivated. So for me to you, thank you for being on the show today.
You're welcome. Thanks, Ryan.
Yeah. Where can people find out more about you and Jeffery Homes?
Follow our website, jefferyhomes.com. All the information is there on our past developments, new developments, custom builds. We're on top of that and keeping it current. So go to the website and give us a like, I guess, or a look.
Terrific. Are you on social media as well?
We are Instagram and Facebook, yeah.
Perfect. Awesome.
Yeah. Okay.
There you have it. Scott Jeffery Homes. For anybody who hasn't picked up a copy of the book, make sure you grab that. Amazon.ca, Chapters, Indigo, Barnes & Noble, all these places. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. Like, share, follow, and subscribe, and we will see you on the next episode.